Hello traders, Adrian Jones here at Tradeology. I'm the CEO of Tradeology, and thanks for joining me for this week's analysis. And I'm going to get straight to it. And first we're going to have a look at some economic indicators for the week. And so I'll just share my screen here, or at least have a look at the news. And I'm not affiliated to this site, but you will be able to source this information. It's freely available. And I'm looking currently at the week ahead, the major news events, and one can filter the news events. I've just filtered it to display only high impact news events throughout the week, as there's a lot happening during the course of this week. To start with, today, importantly, there's a bank holiday in the US. It's Martin Luther King Day there. And so we do see on days like this that there is decreased volatility in the markets, as the major players generally are closed for the day. However, that's not to say that there won't be any impact. There's still some movement, of course, on the markets, and we'll get to see that just now. I'm going to be covering the pairs, some specific pairs, USD related, and I'll look at the pound USD, Euro USD, and touch on the Australian dollar USD before we look at gold and where I expect that to head, and then some cryptocurrency forecasts, especially with Bitcoin. So let's carry on then with the news for the week. We can see that over the course of from Wednesday, there's some high impact news releases coming out. We've got the Bank of Canada money policy report, some rate statement coming out there, and a press conference. And then Governor Bailey of the Bank of England is due to speak on Wednesday. And that will, of course, affect the pound. And then we also have some news moving on to Thursday that involves the Australian dollar, some employment change news coming out there, the unemployment rate, and Bank of Japan outlook report. And we have some monetary policy statements coming out that will affect the euro, as well as a ECB press conference, again, that will affect the euro. Some news out on the data that will affect the CPI, that will affect the New Zealand dollar. And then on Friday, we have certain other key indices or data coming out there with the French flash services, German flash manufacturing PMI, and the German flash services PMI. Now, what does this mean to us going ahead? As I mentioned, today's a bank holiday, so volatility will be a little bit lower on any pairs involving the USD generally. Although I do expect that a lot of the news upcoming over the next week has already been factored into the market. And but one would still have to be careful here. As I suggested in my last analysis, we should avoid trading at least, and this is a top tip, at least half an hour before and up to half an hour after the release of any of these key news items here. And so I'd advise you just to stay out the markets during these particular times, as they can be very volatile. And although one might expect, for example, that in Australia there's going to be an increased data is going to indicate that there is increased unemployment, that one might expect to have a negative effect on the Aussie dollar, it has, for the most part, been factored in, but could change if there's unexpected data that comes out there, for example. So we're going to avoid trading during these times, as I mentioned. Now, these are calendared in times. They're penciled in the calendar, so we know to expect these news releases at those particular times. However, there are other news releases that are coming out daily, and these are news releases that don't relate to the calendars per se. Now, what we are expecting to happen is, of course, the major news for the week or event for the week is the inauguration of President-elect Joe Biden in the USA, and that's going to happen on Wednesday. Now, currently, the expectation is that the US dollar is going to be strengthening ahead of the inauguration and on the inauguration day itself. However, we do know, of course, that the world is very unpredictable, and hopefully we don't see any scenes like we saw over the course of the latter part of a week or so ago, the storming of Capitol, and those kind of events, unexpected events, or events that come out that could potentially negatively affect the dollar. Nobody really knows for sure how that's going to play out at the time of recording this. But one thing is for certain, the inauguration will go ahead. So there is some stability there at least. And what we're going to be finding is that there's going to be an increased strengthening of the dollar over the next few days. And I'll be looking at that more closely as we move to the charts. So let's do that now. Have a look at some of the charts. And the first chart I'm going to have a look at is the pound USD. Now, of course, while speaking about the news, other factors do come into play. There is a rollout of vaccines happening across the US and Britain and into Europe. And as that happens, there's greater stability with, for example, the pound and the euro within those markets as those rollouts occur. But simultaneously, of course, the viruses are spreading, or the virus COVID-19 is spreading quickly, and that mitigates somewhat the effect of the vaccines, as at yet there's kind of a tension between trying to get the vaccines out quick enough while the virus spreads quickly. So healthcare systems are under threat, and that also has a subdued effect on some of the currencies. So there's a bit of a balancing act going on. Now, what we can see here from a technical point of view on the pound USD, I've drawn my Fibonacci retracement from the high over here, which occurred in April of 2018, and through to March of last year, 2020. And these levels are what you see on the chart here. Now, let me just move this out the way here. Now, what we are seeing, of course, is that we are in an ascending channel still. On my last analysis, I also made note of this. And price has been, over the last while, you can see quite clearly, been moving upwards within this channel. And currently, on the daily chart, you can see that it is moving back downwards. So there are certain levels that we're looking out for here. And currently, price at the time of me recording this is around the 1.35 level, which is a key support level. So one expects then that there will be some consolidation around this level right now. And should price break through this, which I expect it will continue downwards towards the 1.348 level, and possibly even further down over the next few days towards the lower end of the channel here at, let's just mark it off here for you, at the 1.338 level. Right, so I'm bearish at the moment on the pound. I do expect that it will continue downwards. I do see some mixed signals at the bottom here, but we are at a key support level at the moment. Price is right there, and we're going to just wait and see what will happen as price consolidates there. Now, over the next few days, we of course would expect the trend to continue at least until the inauguration day. So I'm bearish on the pound USD at least for the next few days. Bearing in mind there could be some volatility depending on what the outcomes of the inauguration are, and I'm expecting that it will go well. So let's have a look then at the Euro USD. Here we see a similar pattern having played out recently with an ascending channel. However, price has broken well below that now. And currently, we find it at 1.20 level. and it's just above another key support level at 1.20, almost exactly at 1.20. So if it gets to 1.20, which I expect it will, I'm bearish still on this, and my indicators below are showing this also. We're very bearish at the moment. We're going to expect that it will continue to that level, consolidate around there, and drop even lower should it go through that level to around the 1.198 level. Now, should it rebound off this level, it could go up as high as the 1.217 level there. So we're going to wait and see how it plays out at the moment as the time of recording this, but I am expecting it to continue downwards towards this level here. All right, so that's on the Euro USD pair. So if I had to look at another set of indicators I've got here on the daily charts, they're also giving me some mixed signals at the moment. No real entry signal. We're waiting, as I said, for that consolidation to occur and for there to be either a breakout or a retracement back off the key support level, which is at this point here, 1.20. So bearish at the moment. I do expect it will continue to retrace downwards to that level, and then we'll see further from there what might happen. Right, so let's move then to the Australian dollar, US dollar. And here I've drawn a trend line, and currently prices just dipped below this trend line. It's also at a key support level there at 0.766. And just as it reaches that, we're going to wait for some consolidation there as well. Now, I am also bearish on the dollar for the next few days, or the Australian dollar rather, and I do expect that it will retrace and reach as far down as the 0.745 level, and that's where I'd be looking out for the next few days, for it to reach around this level here before retracing again. So bearish on the Australian dollar, bearish on the Euro USD, bearish on the pound USD for at least the next 2 to 3 days. And of course, also looking out for any major news that comes out during that time to avoid trading during those times. So we're going to be bearish on all of those. Let's now move to gold. And in my last analysis, I had drawn this flag pattern here. And you can see that currently prices just dipped below this trend line, this upward moving trend line here, and currently is at the 1819 level, or just dipped below that, and is at the $1,798 level, so around the $1800 level at the moment. Now, I do expect that gold will continue its downward move. I'm bearish on gold also at the moment, and the one major reason for this is that the US bond yields are still higher than most people had thought they would be over the last week or so. And so that presents a better investing opportunity for many investors with US bonds. So gold is retracing at the moment. There's also another reason is the stimulus package announced by Biden that he is going to put forward, or is being put forward through Congress, etc., that's been approved. And that was somewhat disappointing for many investors. And so gold is a change in the risk sentiment at the moment. Gold is losing a bit of favor, at least for the moment. And I do expect gold also to retrace down to this key level here, which is at the 1770 level, $1,770 level. And it should continue downwards over the next few days towards that level, at least until after the inauguration. So bearish also on gold at the moment. Now, what we can also have a look at is cryptocurrencies. And let's see where that is at the moment. So currently, Bitcoin is priced at $36,000, just over. It's seen quite a major move down during the course of the latter part of last week. It was at $40,000 at one point, and then collapsed down to just under $35,000 or so, and now is at $36,000. Now, with Bitcoin, there's always movement, a lot more movement in the markets over the weekends, with any of the cryptocurrencies, in fact. And what we've seen is that since then, the weekend, there's been quite a bullish move on all of the cryptocurrency assets. They basically follow the trend of Bitcoin, and Bitcoin currently, for as per this chart over the last 24 hours, is up nearly 4%. Now, I do expect that it will continue this upward movement and head towards the $38,000 or $39,000 level over the next couple of days. And just trying to get open a chart here. Allow me to. If not, I'll just make mention of it. Let's have a look here quickly at where the current signals are. Currently, most signals here, according to these charts, are mainly bearish for the moment on Bitcoin. However, I think with the increased interest in Bitcoin over the weekend, we can see that it will likely increase over the next few days. And that's what I'm looking at. I'm looking at the $39,000 level, at least until Friday. Between today, which is Monday, 18th of January, and Friday, we could see a rise up to 38,000, or first 38,000. It's going to break each of those key levels, $37,000, $38,000, and possibly even reach the $39,000. So carefully looking at Bitcoin, we're looking at the potential of it reaching. It does take some time quite often for this to come up with all my recordings and so on going on. But one could see, if one had to look at a chart, that there was a parabolic rise over the last few months. Hit a certain level and retraced and is now heading back up again. And I do expect that it will try to get back to that $40,000 level, but will find resistance before it gets there at the $37,000, $38,000, and then $39,000 level. So one just has to keep an eye on the charts. I was looking earlier at the MACD with Bitcoin USD, and that was very positive in bullish territory there. And I expect that it will stay that way for at least the next few days. So that then, ladies and gentlemen, is my brief synopsis for the week ahead. Just to give you a quick recap, there's a lot of news happening this week that is factored in on the high impact news releases due to come out. Please do keep an eye on those and avoid trading at least half an hour before or after with any pairs that might be affected by these. We do have the inauguration coming up on the 20th of January. That's on Wednesday. And so I do expect that the dollar will find some strength up until at least inauguration day, provided that there's no surprises, no riots, etc., causing issues or postponements, which I think pretty much has been factored in to a certain extent. It looks like they've got that under control in America for now. And then on the other side of the world, we've got vaccines being rolled out and all the announcements that are coming out. So overall, any pair that's related to the USD at the moment, with the stimulus packages coming out, bond yields higher, etc., and the change in the risk sentiment, I do see that the US dollar will gain strength over the next few days. And that means that we've got a bearish outlook for the Australian dollar, US dollar, euro, US dollar, and pound US dollar. And similarly with gold, with risk off at the moment, higher bond yields, gold bearish, and with Bitcoin, the opposite. I'm going to surmise that we're going to be looking at a bullish move for the next few days before we reach a consolidation level around the $39,000 level. So that's it, ladies and gentlemen. I'll speak to you soon. Please do keep a lookout for my analysis as I do give them at least once a week, and other interesting news and information that I think will be of relevance to you, which I'll release also during the course of this week. Thank you for watching, and please do click the link below or the link in the description to get some more information about trading Forex. Thank you. Have a profitable trading week ahead, and I'll be in touch. Goodbye for now.